All right, welcome to my YouTube channel. My name is DF Basy, and if you're new to this channel, please kindly click the subscribe button and the like button. The more you like the videos I drop, the more it gets to reach other people that need this video and this information. So, without further ado, let's dive into the video. I'll show you how to mark accurate order blocks in forex trading. In forex trading, as a trader, for your for you to have a proper technical analysis, you need to understand where what order block is, how to mark an accurate order block, and what makes an order block valid and invalid. Right. So most times you have invalid order blocks, and many beginner traders make the mistake of going to take trades on invalid order blocks and results to having losses. So here in this video, I'll show you how to avoid those losses, how to identify a valid and invalid order block, and how to leverage from that. Right. So order in every trading strategy, majority of the trading strategies, what you need most times is a valid order block. So now order block in simple terms is a simplified, or let's say it's a modified um, supply and demand zone, or support and resistance. Do you understand? It's a redefined support and resistance, or supply and demand zone. So if you're watching this, I know you should already have knowledge about support and resistance and supply and demand. If you don't, there's a video on my YouTube page. You can go to my page for that, where you see explanations concerning that. So back to the video. Now I'll be explaining what is an order block. Another block Order block, short for OB, is the last bullish candle before a bearish move, or is the last bearish candle before a strong bullish move that causes a break of structure or major displacement. Or in other words, another block also is a block where we have series of orders. This is also a point where the institutional traders, the banks, they have series of orders accumulating at that point. So most of them, let's say you have an order block at this price. So another block forms here because there are many orders, right? Let's say this is GBP card. I'm on GBP card chart. So this is 1 point. I'm looking at the price chart at the right hand side. So this is 1.83779. So let's say everybody wants to buy around this price range. So they set their buy limit, or they set their orders. And this is where like volumes like millions of dollars, billions of dollars, set their orders. Either they are mostly their buy orders or their sell orders. So in that cluster is what forms the order block, right? If I don't know if you get me, but that's what forms an order block. So in most of my videos, I tell you guys that candlestick charts, all these candlestick charts are statistical representation of economic data. So once economic data, example of an economic data, let's say like US bombed France and crude oil, US bombed Iran and crude oil skyrocketed. Why did this skyrocket? The price of crude oil skyrocket? Simple math, because Iran is one of the major suppliers of oil in the oil market, and destroying that their resources or their factories or one of their industries will affect their ability to produce oil to the world, and also to the users of petrol and gas, because I know most people have moved to electric cars and all. So with that alone, that's enough reason to affect the oil market. And you can check, let's go to crude oil. Crude oil, the price of crude oil, let me go to weekly time frame. And it pumped, it, it really pumped. Let me check another broker, Black Bull. Yeah, crude oil pumped. It's really in 2 weeks, crude oil went from 67 uh, uh, dollars to 100 and selling at $110. Now it's currently at $97. That's when the market closed for the week. So that's what affected the market. So now GBP card, I'm going back to GBP card so that we can not this one. All right. So while understanding that every candlestick here is a representation of economic data, statistical representation of economic data. So knowing this, you know that your order block, for what I've explained, is a point where institutional traders place their orders, right? There's volumes of orders there, where now let me show you how to mark an order block. I'm going to show you how to mark an accurate order block and how to use it to trade. So now I'm going down. If you conversant with thumb down analysis, you start from the monthly, start to break down to the weekly. I have a video on that on the YouTube channel you can check. Then break down to the daily. So let's say from here, market didn't print, the chart hadn't loaded from here, right? So we have to analyze from here down to here, right? So I'm using past data, analyzing past data. So now on my weekly, I already analyzed this guy. That's why I already have where I'm going to and what I need to pick. So now rules of identifying an order block. Now they have to be a bearish and bullish candle. All right, let me go to the 4 hour candle, 4 hour time frame and identify this for you. Now, the Bible version of an order block is you need to have a bearish and bullish candle at that zone. And what you also need to have, you need to have imbalance, or you call it fair value gap. You have to have a fair value gap first, then you need to also have a bearish and bullish candle. So bearish and bullish candle, where will I be marking? We're marking this. So that's my order block. Then thirdly, for the other block to be valid, it has to be unmitigated. If you can see it, it isn't mitigated. Mitigated in the sense that, let me show you what a mitigated order block is, how it looks like. I'm looking for something clean. So that, okay. So now if you look at this is a mitigated order block. You have a bearish and bullish candle, but you don't have a fair value gap. But this is what you have. Markets came back here, and this touch here, you have this touch over here. You touch the block before buying up. So it's already mitigated. So chances of this guy holding was fatal. If you can see, markets came back and swept down that block before buying. So chances of that guy holding price was very, very fatal. And plus there was no imbalance, right? Let me look for something else. A mitigated order block. Okay, I'm still looking for one. Let me zoom out so it to be easier. All right, this a mitigated order block. If you can see, a mitigated order block actually in simple form means that markets came and respected that order block sometime or before now, before you seeing the order block. Market had already respected that order block, tapped the order block and respected it. So note, an order block is a one time. I should be typing these things out for you, but for the sake of I'm trying to make this short and pass the message clear. Okay, I'll try and type that. For an order block to be valid, first take notes. It needs to have a bearish and bullish candle, right? This is a bearish and bullish candle. It needs to have a bearish and bullish candle, and then you need to have a fair value gap, inefficiency above it, right? After you have that, it needs to be unmitigated. Thirdly, that means market shouldn't have come to tap there. Like this one, this block, market tapped this block before buy. So now this block, now this particular one, this guy here, this guy. I want to use this guy to buy again because now this guy is already invalid. Is an invalid order block. The next block that I'm using is this guy. Why? Because this guy hasn't been mitigated yet. Price didn't touch. And if you can see when market came here, it tapped and bought. Do you understand? After market tapped and bought went up, there was a buy. Market respected this block. Since this guy was mitigated, what did you see? When market came back, it violated it. Why? Because it has already been mitigated. So it broke down. So most times, most of you go to trade at mitigated order blocks and market hits your stop loss and you complain that the strategy ain't working or the market makers are against you. The market makers aren't against you. They don't even care about your $10 stop loss or your $100 stop loss. They are trading in millions and billions of dollars. So how would they be really concerned about your $20? They don't give or they don't care about your $100 stops. So this is what happens most times, and you complain about your strategy, and the market is against you, or Forex is against you. So with those few points, I'm going to show you how to mark your order block. Let's go back to the main chart. Okay. So now I said, let's take it that market from this blue line down here, market didn't print this, right? But from this blue line backwards, market has really done that, and we're looking for order blocks market respected. So now also note your order block has to break structure. The order block, for your order block to be valid, the fourth thing needs to break structure. And let me type it out for you. So identify a valid order block. One, bearish, bullish candle. Two, we need to have FVG. You call it FVG or you call it imbalance or whichever one. Or if it inefficiency, then or whatever you want to call it. All those are just names, but popularly known for the SMC is SVG. Then after having that, it needs to be unmitigated. Then number four, it it needs to break structure. All right. So read this and read this well. To identify a valid order block. Are you with me? To identify a valid order block, one, it needs to have a bearish and bullish candle. It needs to have, number two, it needs to have a fair value gap. Number three, it needs to be unmitigated. Then number four, it needs to break structure. This is two. To break structure following the trend of the market at that point. So now, with all that said in mind, looking at this chart from here to here, what can we see? We can see bullish structure. Why? Because there are a series of break of structure to the upside. Break of structure to the upside. There's a break of structure to the upside. One break of structure. So what are we expecting? We're expecting a third break of what? Structure to this upside. Hope you're following me. If you can even check from here, past data, I have break of structure here. We still have a break of structure here. So clearly this guy is bullish. We're on the daily time frame. Right. So now on the daily time frame, let's say we are working with the price around here. Working with the price around here. Trying to find trades and mark out good order blocks. right? So over here on the chart, hold on, right? So over here, I can see good blocks. I have one on the daily time frame. This is a good block. Why is a good block? You have a bullish and bearish candle, and you have your fair value gap here, and markets just mitigated the fair value gap and then pulled up. Then thirdly, you have the next block, which is this guy. This is your next block. This is your order. This is your demand zone. A demand zone, or you call it your support zone, or support level, or demand level, whichever. So now let's break down to the 4 hours to see the other blocks we have there. Okay, so I'll be marking out valid order blocks just to show you how to mark another block. Now this block here is invalid. Why? Market had mitigated it. See, there's a bearish. Yes, there is a bearish and bullish candle. Yes, there's a fair value gap here. I'm sure by now you should know what fair value gap. Market came back, respected it, and bought. So this is a Bible version of that block, and you see how market respected it and bought. But I won't be marking out this guy again for market to respect. Where would I be marking out for market to respect again? This other guy as the block for market to tap respect, right? Now, this is an example of mitigated order block. You can see this is supposed to be the next order block. But what do you see here? This order block is already mitigated. And because it was already mitigated, instead of price to come back, to go back up, come back down and tap and go back up like normal. The market broke it. It didn't respect it. Why market did not why market reasons why market did not respect this is because it's already mitigated. Remember, one of the rules, your order block must be unmitigated. Order block is a one-time use only. You cannot use an order block twice. An order block is a one-time use. It's not like a demand zone, or it's not like a supply zone or a support and resistance, right? Where you need to have multiple touches. Another block is a one-time use. So now, if you can look closely, you have the bullish, you have the bullish, you have the bearish candle. Then what do you see here? You have this guy coming down here to mitigate. See this guy here coming down here to mitigate the block. So it's already mitigated. And once it mitigated, what happened? Market, you have a buy. Market went up from here, came very bullish. So since that has happened, this guy is not an is an order block, but it's already mitigated, so we won't be marking that guy. That's why most of you incur losses, serious losses. So now let me go back and continue marking another block. Yeah, it's a valid order block. And for me, I would love to take the whole part. There is an inefficiency or fair value gap, or you call it imbalance, whatever you want to call it. You have a bearish and bullish candle. Most times in order block, what you'll be looking for is a bullish engulfing, a bearish engulfing. So now we're looking for bullish order block. So we're looking for bullish engulfing. When we are looking for bearish order blocks, we're looking for bearish engulfing. Do you get me? So I'll give for bullish order blocks here. Same vice versa. If you want to flip the chart upside down, this is a bearish chart. So you'll be looking for bearish order blocks, bearish engulfings, right? You're looking for bearish engulfings. There's a bearish engulfing here. You have your bearish engulfing, you have your imbalance, we call it your fair value gap. Then mark at the block. That's how you mark it. So now remember your blocks, you should be marking them according to the trend. I hope I added that to the rule. You should be breaking structure. I think I added that to the rule. Um, where is it? Let me go to the weekly. Okay, the fourth rule, it needs to break structure following the trend. It needs to break structure following the trend, right? So now going back to the chart, I've marked series of blocks, and with that, I think you guys should have a clear knowledge of how another block should look like. This is another block. for me, but it's not that certain. Why? Because there's no proper imbalance there. The markets respected it sharp. There's another other block here. Most times you might not see a fair value gap, but if you see a fair value gap, is a high probability other block, and especially when it's following the trend, you know that bad as it be, market to respect that zone. Um, all right. So now let me break down, let me dissect and use these other blocks to place trades, right? So like this block, this block I marked out here, this is a big fair value gap, and it was certain that market will respect this zone. So what happened here? You see this other block, because this guy was mitigated, right? So this guy was mitigated. This guy didn't hold this particular block here, though it was a value block, but it didn't hold. This block didn't hold. Which block held? This block below it from this is the block from the daily time frame. So now what do you see? Note overall the trend of this guy is bullish from the daily and the weekly. So now this is 4 hours. We're looking for structures in the 4 hours to keynote and follow the trend, overall trend. In the 4 hours, what do you see? Once market came back down here, you see market tapping the block and creating series of breakout structures to the upside, breaking structures, series of breakout structures to the upside. Can you see that? So now with this, once market had come here, what would I be looking for to have buys? I don't know if most of you understand liquidity and blocks, but where there would have been another block here. I don't know if you break down to 1 hour, you see there's a block there on the 1 hour. Let me check it. Let me go back there. Okay. So there's a block, but there's no favor there. What happened? Markets came back, respected the block, and there's even liquidity here. So markets came back, respected that block, tapped. So I'll keep my order on the block, my buy limit there, and I'll be targeting. What do I target? Normally I target 1 to 3. So this one is 3.30. That's 1 to 3. Boom, we've made profit. Following the trend, what are we looking for again? We are looking for another order block. So now, mostly people will mark out, look closely. People will mark out this order block here. So this is the next order block. But if you look closely, if you talk, remember what I said about mitigated order block. This guy was mitigated. Why? Because candle came and tapped it already before going low. And if you look, market didn't respect it. Market swept it. Have you seen? So that's how you avoid unnecessary losses. So once you with proper understanding of this, when another block is mitigated and unmitigated, you can avoid some unnecessary losses that you'll be taking or having on your account. So the next other block is this guy. Let me go to the 4 hours time frame. Fair trade on the 4 hours time frame. The next other block is this guy. Though there's no proper fair value gap, this would have acted as this is a fair value gap. This fair value gap here, but it's slim. It's too slim. The imbalance here. Let me zoom it out for you. The imbalance here is too slim. That's it. There. That's it there. The imbalance is too slim. But we have a very strong bullish engulfing following the trend. Very strong bullish engulfing, bearish and bullish candle there. If you backtest and study, you see that most of the other blocks are formed by bullish engulfing. You have very strong other blocks. So what would I be expecting? Market to come back to that block and buy. Simple as ABC. And you can check closely, you have a liquidity here. So once market swap liquidity taps the other block, and on that other block, what will I be setting my buy limit? Market to tap, and then what will I be targeting? 1 to 3. If you look closely, you have 1 to 3 there. Done and dusted. Simple as A, B, C. No sugar coating, no extras, right? So now, still on this, you remember what I told you about mitigated order blocks? So now from this, you have a bearish and bullish candle. But what happened? Market mitigated it here. Market has mitigated it here. So it's not even valid anymore. Then you have this other block here. But if you look closely, you have this week. This week here that have mitigated it already. So it's no longer valid. You can see market came back, likely swept, took some people their SL out before actually buying, right? So the next, even this other block here, yeah, you can see you have a bearish and bullish candle, but what happened is it's already mitigated. So this guy, if you can draw this guy down, you see that this guy didn't hold. It's not you tell me. See, just tapped, fake that till I wanted to move, broke, took you hit SL. Imagine just okay, let's put it like this. You took the buys from there, gave one to two, like targeting one to three. Next thing, bam, SL. This is how you avoid these unnecessary losses. It's already mitigated over here. Just like this one, to the same thing. It's already mitigated. This guy over here has mitigated that blow. So markets will likely not respect it. Likely not respect it. See, market didn't even, it just broke it. So now if you can follow these rules I've given you on how to identify other blocks, I'm pretty sure that you have your TA will move from a bit from, let's say, added 20% increase in high probabilities of speculation because as a trader, you're speculating price movement, right? You're not gambling, you're speculating price movement. Most times those blocks may fail, most times they might be violated, they might not be respected, but in all, you have past data that respects that shows that this thing actually works. So this is another block. This is a what? A bearish order block. As you have your bearish and bullish candle, then you have your imbalance here. So what the market do? Market came, tapped that order block. So let's say I wanted to enter aggressively from there. Keep my entry at the order block, at the start of the order block, with my SL below. Targeting what? 1 to 3. Smash TP. Smash TP. Can you see? This is like this is a counter trend because the overall trend as from this blue line down was bullish, but this smash TP. You get it now. So let me still show you instances. I don't think let me hold on. Okay, let me mark now in current markets. Let me mark the other blocks that market are respected. Like this one, you have this block here. Market. So okay, market hasn't touched, but you just have this block here that push. It hasn't really tapped there, but there's an imbalance here. It is a nice block, but the overall because this trend now, the trend from here is a bearish one. From here down, it's bearish, right? It's a bearish trend. So we're expecting market to tap this block and sell down to break down. But if you look at the daily, from the daily, we know that this guy overall is bullish, but it has shown signs that it has changed structure to a bullish structure here in the 4 hour time frame. You can see this is the last low that broke structure to the downside. This low that broke structure to the downside has been mitigated, and there's a breaker block here, the breakdown to your 1 hour. Market touched this breaker block to the breaker block here. Market hold on. Market touched that breaker block, and since then broke structure to the upside. Then he had the second break. Now we'll be expecting the third break of structure to the upside, which will be coming to this zone. I feel maybe this zone might be violated and might be respected, but that is a bearish order block. Hold on. This is bearish order block. You have the bearish and bullish candle. You have the imbalance. Hope you with me. Have the imbalance. You have the imbalance here. They have the bearish and bullish candle. All right. This is another order block, a very clean order block. The market did come back here. So now, most likely, other blocks at one time is that once market change, now let's say market is changing from here. There's a change and there's a change in market structure. All of this, all these blocks here, they are most times were not mitigated. They might surge price, they might give a kind of rejection, but might not fully have impact on the trend or the market. So this, all of this will now be turned to liquidity. That's where you have people say trend line liquidity. Market will have to clear all of this back down to here. Are you with me? So basically, that's it for order blocks. So, and I'm also show you why you shouldn't mark order blocks against the trend. Let's say this trend is bearish. Now, I'm going to mark bullish order blocks. You see, market will be using you as liquidity to be breaking the blocks. So you get your buys here, get your SL below the block. To hit your SL, why? Because the trend is bearish. So your other blocks needs to align with the trend. There's no break of structure today. There's no break of structure. This other block is not breaking structure. But the other block that's breaking structure is this guy. This is the other block. This is the one that's breaking structure to the downside. Right? This is the other blocks. This is the guy that's breaking structure. So once market comes back up, it's respecting this guy. So this guy broke structure here. You have your BOS here. So once market came, he broke structure to the downside. He has your imbalance, you have your bearish and bullish candle. It meets all the checklists for a valid order block. Then you can safely say, okay, if I'm taking this trade, I'm going to be selling off from here. Though there's a bit of manipulations, okay. Selling off from here. It taps, the sell above. Then you targeting your what? 1 to 3. That is it. TP. And if you wanted to hold the trade down, you'll be holding the trade down to here, and you'll be having the open 1 to 9. So that's how it is. Don't trade against the trend. Ensure that your blocks are breaking structure. There's another block that caused this break of structure here. Where is it? This is the block over here. The block is already mitigated. See it here. Market, market respected the block. So all this is not rocket science. Now, from this block, what you see? You have your bearish and bullish candidates. You have your imbalance. See the imbalance here. You have your imbalance. Although now someone might be asking, is this imbalance not mitigated? The imbalance is mitigated, but the block is not mitigated. And the imbalance was not mitigated fully. Because if it was mitigated, you need to tap the block. So this one just taps the imbalance, then sold up. This guy actually, if he tapped the block, then this block would have been invalid. Would have been looking for another block. But this is the block that broke structure to the downside. Then this is the other block. This is another block that broke structure. So you need to identify, follow the steps I've given you, and you see tremendous results in your technical analysis and how you mark your order blocks. So to identify a valid order block, one, it needs to have a bearish bullish candle. Two, it needs to have a fair value gap. Three, it needs to have an unmitigated, it needs to be unmitigated. Then four, it needs to break structure following the trend. Right. So with this, I'm sure you guys will know how to mark accurate order blocks. So if you're new to my video, please kindly like and subscribe and also share. Thank you. Study hard and trade easy.